Hello, folks. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today, which is Monday, December 8th, 2025. Today's webinar is titled Is Risk Appetite Growing? And we're going to be covering all kinds of interesting things in the S&P 500, the technology sector, and some of the interesting sort of rotation inside of technology and some of the risk-on sort of sectors, the cyclical sort of parts of the market that are sending some interesting signals at the same time when everyone is worried, or when people say there's all these concerns about the economy and jobs and all that stuff trickling through and weighing on the Fed, and everything like that going into the meeting on Wednesday. We're going to get to that, but first here, the ETF, the standardized returns of some ETFs we're going to be talking about. And remember, in this webinar on Mondays, you look at the big sectors, the big indexes, and try and understand things, especially from the weekly charts, to kind of help keep us in focus on some of the bigger trends happening in the market. So going to just first also remind you to go to tradestation.com and scroll down the page, and you see this article, Are Brighter Spirits Lifting Risk Appetite? This guy with his phone all excited about the risk appetite and brighter spirits. But basically, this article has a lot of the elements we're going to be talking about in today's live stream and discussion. So I think the main thing that does stand out to me is that we're seeing a degree of strength in a lot of cyclical parts of the economy, and we're seeing it in areas like technology, hardware, kind of less prominent names, but we're still talking companies in the S&P 500, relatively big companies. And then we're also seeing it in um, in things like retail and certain kinds of industrial companies that are interesting to kind of see as well. So it does show a degree of confidence in the economy that you're not getting when you look overall at the a lot of the commentary about the job market and things like that. So what was interesting last week was that we actually had 13 members of the S&P 500 rose double digits and only four dropped 10%. And a lot of the real internals, what we saw with these companies like Microchip Technology, NXP Semiconductors, a trucking company. These are the real leaders, and we saw that a lot of the risk off sectors were struggling. So I think that's an important sort of thing to see here as well. Now, what's interesting to me is that let's take a look here at the actual article. We actually have a chart here. Look at the S&P 500, and to me, the main thing that we really want to focus on is the 68.52 level. It was the low all the way back here in this big bearish outside candle. Look over here on this chart, it's updated. There was a bearish outside day on October 30th. You can see the low of that was at 68.52. Now today we're actually dipping a little bit more as we start the webinar. But from my perspective here, the main thing that I kind of always watch is the 10-day simple moving average. And at this point, when we're basically still above it, we had a significant thrust off the lows here in a period of consolidation. We're at four straight days now. We're kind of just pulling back into this range. So, we're going to look at the weekly chart as well. But from my perspective, this is a kind of normal kind of digestion that is kind of consistent with this right now. From my view overall, the big issue is the 67.75 level was a level that we remained above last week, as we had kind of said that the strength of this thrust made a real break below that, or even a test of it, not hugely likely. And at this point in time, we're just kind of filling some of the price action from last week. So from my view here, remaining more or less in this range is the kind of normal drifting you would expect to see before an event like the Fed. Um, Now, the next thing that's important is, see, we actually talked about this, is this the distance from the 10-day moving average. And as this goes down, it shows that we're getting less and less kind of overbought. And I think that's actually the main thing we had flagged before. We last week we talked about how that had spiked up really high and now we're just drifting down. And this is kind of what we're kind of referring to on this. All right, now I don't have it on this chart. Maybe I have it on this chart. The MACD having turned sharply higher here as well. So I think this is the main sort of thing, is that we're in a spot where we've essentially broken this kind of falling trend line. We have held a key support level that was down here at 65.50. We managed to get above another level around 67.75, which was this line across here. So from my perspective here, this is a spot where we're kind of consolidating near the highs, and this is still consistent with some of the sort of upward sort of patterns we've seen. And then when you dig deeper beneath the surface, like I mentioned, that we actually have a degree of of interesting mix in terms of which companies are doing well. Now, also, don't forget about the Federal Reserve on Wednesday at 2 p.m. And then we're going to have Broadcom earnings on Thursday afternoon. We had talked about Broadcom. We did a trading view idea on it. Is basically this pullback in Broadcom here. And we had mentioned as it was pulling back that a retest back under this kind of 380 level. And what's interesting also is that this is a 50% retracement of this previous move. You go from that Friday to the Friday. You can see we basically hit the 50% retracement exactly in Broadcom. So it's interesting now, we're going to get to this, is essentially NVIDIA has kind of become a source of funds and people are moving to these other areas, which I think are interesting and we're going to mention. So also, if you look at the Fed, I think I want to just quickly mention that to me, I think one of the things about the Fed that's important to realize is that we basically have, let's look here at the 10-year treasury real quickly. But I think with the Fed right now, we have a situation, TNX, with the Fed, we basically have a situation where, they are missing data, as we know. We don't know the November jobs data or inflation data, and those numbers are going to be coming out the following 2 weeks. I mean, they're not this week, but they're going to be after the Fed. So there's a chance here what the Fed basically does is they kind of don't say anything very meaningful. And then what happens is we get greater messaging in January and in the new year, because at that point in time, we will have had both the November data and the December data. So I think it's important to realize here is that there is a degree of just kind of uncertainty drifting into the Fed. But at the same time, the Fed has, there is that potential of the Fed just kicking the can down the road and waiting to get more data. And if that's the case, after the Fed meeting, people could refocus on some of the fundamental earnings things that we have been kind of mentioning, is mentioned in this article. One thing I thought, if you look in this article for the mention I took from FactSet, they do this great work, and what's interesting is they basically noted that analysts are raising estimates during the quarter, and that's unusual. For the second quarter in a row, you have analysts raising estimates going in to the end of the quarter, this current quarter ending on December 31st. So that also shows that we have some real trajectory here, real momentum in earnings. And if you look at some of the estimates, they have been going higher also for next year. So I think overall here we're in a situation where we do seem to have some underlying support on the side of the fundamentals. So to me, that is something that cannot be forgotten as you look at the overall market here. There's going to be this huge obsession with the Fed, but the big thing might just be, okay, Fed is over, and now we can turn back to um, corporate earnings and things like different kinds of AI and other parts of the market that are starting to have some performance. The big thing I think overall, though, is that the bond yields are the biggest risk now, the 10-year treasury yield. We have a risk of something happening like we saw back here in February, I'm sorry, in September of, where are we here? Back here in September, I apologize. This was here when the Fed started cutting and the yields freaked out to the upside. So we do have some risk here of things being too dovish. And I think that's one of the things also with talk of the new Fed chairman and everything else. For me, this is something that it's lingering out there as a risk. I think we have to be careful of overstating it, but it is something out there that I think is making some people a little bit nervous. But the idea is that the Fed gets too dovish too soon and inflation goes higher, then long yields go higher as well. And then you kind of shoot yourself in the foot in terms of not managing to bring down borrowing costs. So that is something that is a risk that's appearing. I think we have to realize it as a risk and not, necessarily view it as like the dominant thing in the market right now. From my perspective, when I look at the things overall, look at the price action, the article I did, the dominant thing in the market right now is still technology. It's a widening and diversification of the AI trade into a lot of hardware names, overall strength in the NASDAQ, and some new emerging strength in things like some of the industrial and retail names that are getting some attention and some price action. What is interesting also, another thing in the market is that the really big names, aside from Apple, but the two big like Nvidia and Microsoft are just kind of at this point, just they've had these pullbacks and they're kind of sitting and drifting here as these other names like ADI and Texas Instruments start moving higher. And the reason I say that is because these are companies that now inside of technology, we're starting to see the AI trade shift to these other parts of technology. MCHP, for example, these companies make lower end semiconductors, and it's one of these markets that when it's good, it can be very good, and when it's bad, it can be very bad in terms of their business. There's not significant competition in the space. It's one of these things where if you're a manufacturing company and you buy, you know, if you open up a dishwasher and you see like the semiconductors in it, those are the kind of low end. They're called ASIC, ASIC chips. There's a lot of chips like that. That if you're going to buy those big AI chips from NVIDIA and you put them into the technology, into the big hardware stack, connected to those chips, there's all kinds of little controllers and power management chips, and a lot of these are semiconductors that are very inexpensive. But the thing is that when things are good, the business tends to surge, and when they're bad, you tend to get a glut. They're inexpensive, but they're also in a spot where there's not a huge amount of competition for them, so they can be their actual performance, like memory chips, can be very volatile. And what's interesting is if you look in technology for the last few months, we've seen names like you know Micron and names like Western Digital have big rallies. These are companies that historically made low end data storage products that no one ever, viewed as being super high end products. In terms, when I say high end, I mean high cost or high degree of sophistication. Um, but the thing is that as people are deploying the AI, they need all these other things for data storage. And what's interesting now is we're seeing the same sort of narrative that took hold in a name like Western Digital or Micron back in over the in the spring and summer, that may be starting to appear in companies like Marvell Technology. So what's interesting is in our article we actually identify some of these here. I think it's called changes in chips. Texas Instruments, ADI, On Semiconductor, NXPI, Marvell. Now Marvell had a downgrade today on some of their business involving Amazon, and it was an interesting kind of downgrade. But it is interesting also to see last week they aggressively raised their guidance and got a lot of kind of bullish notes. When you see things like a price target raised from 85 to 135, these kind of say that there are people who are simply surprised by the strength of the business. And this is reminiscent of the kind of thing we saw in Micron 3 to 4 months ago. Also, another name I think is interesting in here is a name like Keysight Technology. This company now is starting to talk about 6G networking, which is going to start to come in the end of the decade. Remember, you may or may not remember 5G. About 5 or 6 years ago, it was a big driver of upgraded wireless internet. And now the next thing, there's a potential for 6G, which in theory will have, allow holograms and stuff like that. So we're kind of far out, but we're in the world of technology. That is where the attention will start to be. And they make a lot of the equipment and technology that goes into the actual, construction of the networking. So this is something I think is something also we might want to be aware of. A name like Keysight. If you look at KEYS, um, big breakout on earnings, and here it is. Kind of, I'm going to remove this, but basically, breakout on earnings. It's near an all-time high from way back here in 2021. In fact, it's just kind of breaking above it. There's one of these names that, short term people might see an overbought condition, actually bearish outside day today. But there's also might be one where people think, do we get back down to kind of 204, 200? Is that an area where people might want to be setting price alerts and thinking about this having some potential continuation? So I think that was interesting one also that we mentioned here in our article. NetApp is also a company that had this interesting gap higher on earnings. Look at how it gapped higher and it got smashed back down. It went clawing right back up. So, I think this is an interesting sort of pattern when you see things like this. It says there's a lot of overall negativity, short-term bearish momentum, and now things are starting to kind of like stabilize here. So I just think overall, this is something also that people might want to be aware of. These are all much lower in the kind of value chain, or I won't say value chain, but they're much lower in terms of multiples. They're much lower in terms of kind of like flashiness and real prominence. Getting now down, you're going from the brain down to like the bones and the muscle of the technology stack. But that is where we're starting to see the price action. You look at Nvidia just kind of drifting, and you're seeing these other names move. It does show a potential degree of change, and I did want to mention that. Now it's also interesting to look. I would just mention that Tesla here. We did a trading view idea on it as a consolidated here. This chart is a little bit different, but the 8 day and 20 day, 8 and 21 day exponential moving average lined up in a potentially bullish pattern there. Got the move above it. This is a different chart, but it is interesting also that we did an article. Also, we talked about how Palantir was lining up and for that cross to potentially happen. And I think it's interesting also to look at all these companies had a lot of negative short term momentum in the month of November. Now they're showing signs that 10-day moving average is rising, all those sort of things. And I think we might be in a spot here where people do actually see the potential for some of these names to start having some short-term momentum turning bullish after that period of short-term negativity and bearishness. Like Nvidia also here. Look at how it's getting above that 10-day moving average starting to rise. It's clawing above that 21-day exponential. Actually, you can put it, I think I have, do I have the 8-day here? No, I'm not going to waste time with it. But I'm just saying some of these names are starting to go from a short-term bearishness to short-term neutrality, potentially short-term bullishness. And this might be something to kind of focus on, which can keep people's focus back on technology. Um, now, a few others I thought were interesting. Um, Here's a company that does not get a lot of attention. It's a relatively new. It's like solar energy, but also like batteries, and they kind of have this whole thing with the whole um, you know, um, data, backup, battery backup, and power for AI and stuff like that. But this company, T1 Energy, they actually had a meeting with JD Vance sometime back here in late November. And the stock has like doubled since then, roughly. And so I think it's interesting that they have this sort of thing about, an onshore domestic energy production. It's partially solar, it's partially battery backup, but there's also a degree of kind of AI data center sort of thing. Remember, some of the biggest movers we saw were names like Bloom Energy, BE. It's this kind of energy tech. It went from like, 24 to like 140 in a few months. I'm just saying a name like TE, it's a relatively small company. It has that sort of news hook of, being of meeting with the vice president. So I want to just kind of mention that as a name people might want to kind of look at as some of these areas as things spread. This is not an S&P number. Remember, it's only maybe a billion or two of market cap. Another name that is starting to pop up and I want to mention is Jabal Circuit, JBL. This company they basically manufacture. The contract manufacturing companies are also, if we're starting to see the focus on the sort of, lower end technology, the kind of, blood and guts of the, of the AI trade, then this also is something where a lot of the stuff that is companies sell is actually made by companies like Jabal Circuit and Flex. These are all companies which are the contract manufacturing companies. There's three or four of them. Flex and JBL are the only two I can remember right now. CLS is another one. These are also, you look at them, there's the charts in many ways of these of CLS and Flex do appear to be in longer term uptrends. A stock like JBL has been consolidating after, but longer term they do have, an upward trajectory. So these are also, this is what I mean right now. Names like Nvidia might sputter, Microsoft might sputter, and then these other names are where people are starting to actually focus. Um, Things like, again, Marvell, Texas Instruments, ADI, onsemi, they make like power controllers and the different kinds of data converters that go inside of like servers and stuff. Microchip Technology and NXPI make some similar sort of chips and things like that. So I thought these are all just interesting to mention. We kind of go through them in the article, so I wanted to kind of point that out to you guys. So now jumping back just to the S&P here, like I said, right now, we're kind of just holding in this range. So there's nothing much more to really say about the S&P. If you look at it on the weekly chart, I think the key thing though is that last week was a record weekly closing high, and that has been an interesting signal at different times. So I think here this is a spot where the 67.75 in my view, or last week's low, would be kind of, I would say last week's low of 6,800 even is really the level that people will be watching near term on the weekly chart. So I'm going to move that up because to me, a low matters more than a recent high when we're looking for support. So I'm going to I'm going to move my line up here to 6,800 on the S&P on the weekly. So, also, we had done in our article on, it's interesting to look at the S&P here. I can actually move. I think I have an indicator I can add called, um, I'm sorry, I'm going to add one of my indicators here, which is I have this on, make it available in our other webinar as well, but it's called MA Speed. It shows the speed of the 50-day moving average. And what's really interesting here is if you look, the 50-day moving average started falling slightly. This tells you how fast the red line is rising. And what's interesting here is that you'll often see is you'll see it kind of slow down when the market pulls back. Like right here, it's interesting how it just kind of slows down and then it kind of starts inching higher again, and then it can accelerate. So at different points in time, when this thing gets down, it kind of shows in a way that the uptrend is oversold. That's a way to think about it. So I think it's interesting to see how it kind of came down here. And now, as long as we hold above that 50-day, the red line here, this green line is likely to start rising, because if you're above the average, then it will pull the average higher. So right here, I think it's important to realize that this suggests that the intermediate term uptrend, after a period of consolidation and pause, is actually poised for a potential acceleration. And I think that's the key takeaway from this daily chart of the S&P 500. Now turning to the weekly chart of the Qs. Very interesting how the close from the last week of October is turning into resistance here. And from my view, it's interesting just overall to kind of just realize it is a degree of a range here. But again, at this spot, from my view, I mean, the support in many ways that people could look for would be, I'm going to move this support up to this close from those 2 weeks ago. I think this line around here around 620, 619. Um, this is potentially a sort of level, but from my view overall, this is kind of in a range, and the overall level, as long as it more or less remains well within last week's move, it doesn't have a lot of real significance. And another way to look at it is look at the Fibonacci retracement here. So I go to Fibonacci retracement, and I just go for halfway up this candle. Halfway up the candle is right around 621 on the Qs, and we're above that. So from my view here, this is probably something where, as long as we hold like half of last week's candle, people are going to view it as kind of remaining healthy overall, in terms of the uptrend. Now, the Dow, from my view here, this is also something where we can just look to fill this last week, just kind of hold, as long as we hold and turn it into an inside week. Had a record weekly close last week. It would also suggest that the uptrend is not necessarily at risk. The Russell it's interesting because the Russell actually had a weekly closing high last week, and this is showing signs of a potential breakout now. And to me, the overall thing just to be aware of, though, is the long yield, long end of the curve. There are signs of the Russell wanting to kind of break out here, and it's one of these things that's given so many false. It's done it so many times before. It's like Lucy in the football. So I think there's a lot of skepticism about it. So from my view, let's see if we can get a close here above the all-time high, which was back here in October. That all-time high was 24.23. Let's see if we can close above that for people who are really, oops, wait a second. I'm sorry, the high was 25.42. And see if we can get a close above that to confirm it. But this is interesting because it was a record weekly closing high last week, and that has been a positive signal in the past. That is the RUT. Now, the TNX, the 10-year Treasury yield, like I said, this to me remains the biggest thing people are going to be anxious about. However, yeah, you can say we broke this kind of line and triangle, but I think that the interesting thing here to see is we're up to 420, and let's see if we actually kind of get above 4.25, 420 to 4.25. And if we don't, I mean, 4.25 is right about here. And, we have a lot of areas through here where it has, various spots it can kind of probe up into without necessarily turning into a real uptrend. So from my view here, this is actually the main thing that you'll just kind of need to be aware of. And I think there's a maybe 20 or 30% chance that it could maybe have a real squeeze higher and cause, bearishness. But I think overall, that's just something that we have to be aware of. And if it does start to squeeze, to realize it, then we might be in a more difficult environment. Now, the dollar index is strange here. And I have to say, um, some of the things happening now, I think we're entering a really strange, dynamic because, I mean, I don't want to talk about like geopolitics, but last week the U.S. issued this big, strategic document, basically saying all these things like, Europe is not as important and all this sort of stuff to us. And I think I say this because, the dollar index is like the euro is, I think, more than half of it. I mean, it's a huge thing. So if the euro has trouble, the dollar index, has reasons for it to go higher. So I think the thing is that there are things happening now which may actually cause strength in the dollar that doesn't make as much sense. And it's not about the dollar being strong, but about Europe having issues. So I just think that's something to think about here. So I don't know what to think of the dollar index here, and I want to just kind of mention that. There are some reasons to see the risk of this squeezing higher. It's not breaking lower here, and it's holding in this range. So I want to just mention that I think that there are some risks also of like the dollar squeezing higher, and that may or may not have a negative impact on precious metals or other parts of the market. It's just one of these things here that could potentially turn into a little bit of a risk, but again, it's just not a dominant thing. But right here, I think the dollar index is just kind of not clear, and it does have some risk of squeezing higher. All right, now materials. Now there was a strange thing. There was a stock split last week in some of these. Trading View, I'm sure will fix it, but this got messed up because there was a weird data print. There's a stock split in a few of these spider funds, just so you know, and some of them have some issues with the charts, which I'm sure will be fixed. But anyway, the point is that this now is kind of in this range. We had identified last week this level around 45. We did stall at it. This is also kind of if the dollar squeezes higher and things like that, materials here have that kind of degree of risk. So I do think it's interesting to kind of see this weakness and to realize that this actually is a spot where we might see more downside here in materials, and this is actually something I think people might kind of see some potential for this now to kind of break this level it's been and actually go down to make new lows versus we're back here in November. XLB materials. XLC, now, this is one that, overall here, we had mentioned how it, has this strong weekly chart, and overall, it remains, very much in that sort of pattern. As long as it more or less kind of remains mostly within last week's range, you're probably going to just let it consolidate here and essentially view that it has this strong weekly sort of uptrend. Today we have all this drama with Netflix and all this sort of stuff happening, but there's also, a possibility that when that Netflix buying Warner Brothers, and there's a pair, I can't remember all the names, that they're basically a bidding war over the Warner Brothers, media assets. The thing is what happens when that ends? It may create the opportunity for something of a relief rally in communications. I think that's an important thing. Also, there was this report last week that Meta, had this, they're going to be cutting some of their expenses and stuff. And I think that's another thing here. The thing about Meta is they can just cut expenses and basically, create a positive catalyst for the stock price. It's kind of at their discretion. And I think that's something that is out there for a company like Meta, which has that big CapEx budget. These companies can decide we're going to just scale back on some of that CapEx, and it could create some upward momentum in something like Meta. So I want to just kind of mention that. Um, XLE, this has all kinds of the geopolitical stuff happening with, Ukraine and Russian exports and all of that, but it remains stuck in this range. And, from my view here, this is something that continues to have a risk of getting drawn to the downside. I think it had a boost of people thinking yields are going to move higher. And when yields move higher, it seems that people often buy energy stocks as a way to position for yields moving higher. And so I think right here, it's at the top of its range, and people may see this getting sucked back down. This thing got cut in half the price because of its because of the stock split. So it used to be up around, in the 80s and 90s. So now the range is between kind of 46 down to 42.10. That is XLE. XLF is one here where this is, in my view, an increasingly muddled sort of sector. There's been all this talk about Berkshire Hathaway kind of struggling and having a lot of changes with Buffett retiring soon, and I think it creates a lot of uncertainty in this. It's actually the biggest member of the XLF. You'll not might not realize that. So for me, overall, like the overall area, right now, the thing to think about in financials are the individual names. Some of these names that have been breaking out, maybe like Goldman or something. You'll be focusing on those, and then you have in here a whole bunch of random other companies like insurance companies and stuff that are just kind of drifting on their own. So financials for me here look, the chart has not broken out, and there's a lot of reasons for it to maybe not have a lot of conviction one way or the other. XLI Industrials, however, may be in a tighter spot. There last week there was actually an interesting note from Bank of America about trucking stocks and transportation. A lot of the industrial companies involved in trucking, like PACCAR and stuff, had these strange, unexplained rallies. I couldn't find any news on this. These make trucks and things. So the airlines have been very strong. Some of these airline stocks have been jumping. Southwest, a lot of these companies have had some bullish news. So I think overall there is something happening in the industrial space, and it could be something that is setting up for a breakout here. This very tight period of consolidation, people may look for us to have an extension in the industrial names if they escape this long period of consolidation. This is a potentially bullish pattern. They say the longer you base, the higher the space. That's a sort of saying for something like this is a long sideways consolidation, and people may be looking for a breakout above 105, 155, 156 on the XLI. XLK here is similar to the Qs. Wait, it also has this weird issue. From my sense here, it's even positive on the week, and this I think is the main thing to focus on is that this is essentially not even turning negative on the week, and I think that at this point in time, the overall weekly of this is positive, and the first support on anything here would be, again, I would say retracing about half of last week's candle. As long as we stay above that kind of halfway mark of last week, people would probably view the overall weekly uptrend as being in effect. Consumer staples here remain kind of stuck. We had highlighted this level last week, and we've seen downside since it failed. And again, consumer staples here being weak is actually something that if if you have a risk on bullish mindset, that can actually confirm weakness in consumer staples. Actually, can confirm bullishness in other parts of the market. Real estate investment trust here also maybe setting up for a potential break to the downside of yields inching higher and stuff like that. This part of the market has a lot of potential fundamental problems because of just the fact that they have a lot of refinancing to do and stuff like that. And we might need to see them get through the refinancing cycle, have some blowups, have some washout, and have a sense of yields really moving down. And that could be, we're not talking weeks, we're talking maybe quarters or even years before this thing has a real clarity ahead of it. They have a lot of work to do. Utilities here, we mentioned last week also the risk of these getting sucked lower by yields moving higher. We also have started about this, but this is exactly what happened. And I think right here, utilities are in a problematic sort of spot for that very reason. And so I think right now with utilities, we need to just have some kind of sense of yields having peaked. And I think people now see with utilities that they've run pretty hard, and there's really no reason. There's no, I won't say no reason, but there's no level on the chart. There's nothing here that gives any kind of real clarity until maybe something even closer down into the low 40s, around 41.5 area, somewhere in here. People may look somewhere in this kind of zone between I'd say under right around 42 down to 41.5 might be where people actually really start getting interested in the XLU. XLV healthcare, it's stuck now. It failed to break out. People may look for this range. Things get sucked down into this range. So from my view here, people maybe want to look at the first spot to be eyeing would be, some of these levels from over here in March of last year, somewhere through this range, 150-ish on the XLV. XLY, the consumer discretionaries. Um, Sorry about this chart once again, but we also have today with this, there was a downgrade of Tesla today based on valuation, but it's interesting to see some of the things we've kind of seen with things like some of the transportation, some of the travel stocks and cyclical stocks and things like that. Strong earnings of some of the retail names, the Tesla robots and all that stuff coming next year. So from my view here, we're just basically filling and holding this week from last week. And if we just remain inside of last week's range, that could be something that also is consistent with the trend remaining intact overall. So hope everyone has a great day. Remember, the Fed meeting is on Wednesday, 2 o'clock Eastern, dot plot and all of that. And then we have Broadcom earnings on Thursday afternoon. Hope everyone has a great day, and we'll see you on Thursday for market trends. Take care.